We told you it was coming. That's right here on the National Real Estate Cafe with Don Getley and Gino Fronte, where you get your daily dose of real estate market updates. We told you the market was going to rebound.
Yeah, you know, you can look back now on our shows from Q4 and Q1 where you thought these two guys were crazy, but this thing, spot on for the last 8 years.
Because you heard the media go, we told you it was coming, that the meltdown was coming, the slowdown was coming, the market's too overheated. It wasn't overheated. It was busy because we had 10 years of no market at all. So, of course, it was overheated for a while. We had 10 years of pent-up demand. And then it slowed down some because we had interest rates forced up more than they should be. And we said they would. We said the Fed overacted, and therefore rates went up higher and killed the market for a little while. What spurred it on?
Well, so what they did is they killed the market. But we're still yet to see if that was a bad strategy. Maybe it was okay that they did that because to slow it down.
Okay.
That they had to hit the brakes. Things were getting a little hot, so they hit the brakes hard, and we felt it.
And I think it was too hard.
Okay, but
no, actually, it was their verbiage was even worse.
That's
Maybe
what
their
happened.
Moves were okay.
Right, but the speculation that it was going to continue to be
without having documentation yet, any data. The problem is what they were saying is they raised to slow down the economy to keep inflation in check. But then they said, and next year we're raising 3, and the year after that we're raising. And we're like, wait a minute, we don't even know what's going to happen.
Right. So the couple things, the Fed always acts and reacts to fear of inflation. First thing they do.
That's their job.
That's their job, is to slow down inflation, slow down inflation, slow down inflation, so you don't end up like Argentina. Now, the only thing that's worse than inflation, deflation. So now what are they going to do? Speed it up, speed it up, speed it up. But that's
now they're talking about lowering interest rates potentially, maybe as soon as July, to keep the economy going, because it has slowed, which is okay. We don't want an overheated economy. Slowing down the growth and having some growth is good.
Stability would be great instead of boom and bust. And so this report here from Redfin indicates that we have some growth, but it's relatively tame.
Yes.
So 3.6% home appreciation on a $500,000 asset here in California.
Yeah,
those are good gains. Those are really good gains.
3 to 4% is standard, and that's good. Because remember, that's 3 to 4% on the entire value of the home, not what you invested, the entire value of the home. Talk about leveraging. But we just wanted to show you this report because we told you it was coming, because we had a lot of reports that showed the real estate market slowing down due to the rising interest rates. I mean, we're talking major. The difference between the rates at the end of last year to now is 0.75 to 1%.
I was just going to say closer to 1% differential. And that differential could be the difference between you affording the school district, the pool, the bedrooms. The difference between you stop being where you are and move to where you want to be could be that 1% difference.
All right. Redfin doesn't have to tell you. We're telling you right here in the National Real Estate Cafe to get out there and take advantage of some of the lowest rates. We've seen in 2 years, some of the lowest rates in history. And it's more important the rate than it is the price. So get out there and take advantage, right, Gino?
For sure, 100%. And we'll talk more about this, but existing home sales were up too.
See you tomorrow.